Okay, for those who are here or here for the first time, my name is Kai Jun. Second year student, going third year already, doing content and finance. Been investing through fundamental analysis. And actually started on this mini webinar project to actually share with regards to I would say financial literacy, as well as hopefully motivating you guys to actually kickstart your journey. Disclaimer is I'm not a financial advisor, so before you do anything, do seek your advice from a respective consultant or do your own due diligence in terms of research. Okay, just take this whole sharing as like a entertainment or education purposes. Yeah. So actually we begin a little update with regards to the current affair or what's going on around the world is that we can see the ongoing, I would say, dispute between US and China and how they actually, I would say, disabling each other in terms of the business aspects, such as like disability, stop, I would say banning of TikTok and stuff like that. And Apple actually, I would say, remove apps from the App Store itself that is from China, as well as EU. I would say this unhappiness between EU and China itself, as they try to offer citizenship to Hong Kong. So, back then in the midst of their, I would say, conflict lah. So I'll actually touch a little bit more with regards to this next week. So for those who are interested with regards to current affair and how it actually might affect Singapore directly or indirectly. So yeah. So without discussing more, we will actually get right into today's topic, which is Netlink NBN Trust. This company, they actually offers, I would say, optic fiber, and they are the monopoly within Singapore itself, which is the reason why I actually picked them. And actually been in my watch list since sometime last year, mid 2019. Reason why I haven't been investing into them is because back then they are pretty young company. So at the same time, I would like to hold out a little bit more to, I would say, to view this company as well as how they operate in terms of their business aspect. So investment thesis, y'all can read or don't read is fine, or you can just listen. So they're actually the monopoly of Singapore and they do offer the designs they build. They own and operate Singapore nationwide fiber network infrastructure. So this infrastructure, for those who are unsure, is actually this new, I would say, Internet of Things that actually offer a high-speed internet access to both residential and non-residential, including of the non-building address points. So what are non-building address points? They are something like your traffic light, your Wi-Fi hotspot kind of thing, as well as, the connection indoor and outdoor. So the reason why you're able to get, internet connection in the subway is also partly because of them as well. So I would say you do get to see that everywhere, but you wouldn't know that it's because of them as well. So I think this is one of the, I would say, the underdogs in a sense. So they have actually shown stable growth since IPO in 2017. Actually, have an expansion in the upcoming years, given that Singapore will actually move towards 5G. Implementing of 5G in the near 2022-2023, as well as they do have. Sorry, give me a while. Yeah. Okay. So in the near future, they also have this new initiative, the Smart Nation, which Singapore is trying to move towards too. Yeah. So as an investor, for the past 3 years, we do get to see a 33.37% annualized shareholder return, and with a market cap of up to $3.72 billion. I mean, this our one way or another, I would say positive results that would incline investor to consider this particular company. So Netlink, they are actually offering a pretty attractive average yield of up to 5.3% and have been paying consistently in the past years. Despite the current situation, they are still going to pay. From what I do know, there is no dividend cut. But before you actually, if you guys are actually looking at this company, do read out on them first before you take any actions. So we are expecting, a residential connection of up to almost 100% penetration. Currently, there is only about 85% as of today. So what I mean by that is about 85% of our household are actually using optic fiber. The remaining 15% are not. So in the near future, when 5G is implementing or Smart Nation is moving forward this initiative, we're actually expecting 100% connectivity. So there is actually this 15% as well. And currently, there are more than 1,400, 1,400, 1,400 NBAP connections island-wide, supporting your mobile base station. So This includes like, you know, when you go hawker center, you see this Singtel Wi-Fi, you can get to connect to this hotspot, or you go shopping center, yeah, it's also all done by them as well. Most of them are done by them. So they actually, the other, I would say the last reason would be as a fundamental investor, what we want to look into is their corporate governance. So actually they are committed in terms of upholding their highest corporate governance standards. I would say in due to supporting the Smart Nation project because it is run by government as well as they are actually regulated by the government, IMD if I remember correctly. Along the way, if you got any questions, just feel free to put in the chat and we'll just get to it at the end of the session itself. So their business model and their revenue stream is pretty, I would say, straightforward. Split right down to 4 different segments. In the picture itself, you can look at RAB revenue, this one, whereby the 4 segments are the residential, non-residential. Non-residential are like within a CDB area, like offices, industrial parks and stuff like that, and business parks. NBAP, like I mentioned earlier, your traffic lights are your Wi-Fi hotspot lightings and this kind of thing. Duct and manhole is like those, I would say, cable landings are like you know, whereby they dig up part of the road. Then you know those traffic light you see when you drive past on the road. Then you see like those foreign labor, they are actually digging out certain things. Then they putting on this like very thick black color cable into the road. Then they cover it again with the tar. Yeah, these are also done by them. I don't really exactly know how to explain or use the terminology, but I think I'll get what I'm trying to say. So yeah, so these are their revenue streams and stuff like that. You can have a look. If you want a screenshot, you can go ahead. If not, yeah, moving on. Competitive edge. This is very unique compared to other companies because they are no monopoly one way or another. Yeah. So 9 out of 10 homes under the residential segments have actually optic installed within their home, which I mentioned earlier, 85%. Which actually leads to my next point. When 5G is actually implemented or introduced to the market, Singapore market itself, there is actually a need for an upgrade to a certain degree, depending on the current status of their network in their house. And Netlink is there for them in a sense. So Netlink is at this point of time is actually the only provider of such service, which is the reason why I say they are the monopoly, but only in the residential aspect. From what I do understand is the non-residential aspects such as CDP area for business park, there is another competitor from SP Telcom, and I'll get to it in a bit later. So not to mention, aside from all these, I would say, all these upsides, with the current confidence, you know, from around the world actually invested into this particular company, we do see to a certain extent how the company is being run and how they are being appreciated as well. Financials itself, this company, due to their very good transparency, is they are very upfront and they need to be upfront. They actually listed in 2017, you know, despite these current circumstances, which is the ongoing pandemic and stuff like that, which might, I would say, to a certain degree affects how they can actually move forward or develop, or I would say grow in terms of the company business aspect, because they do to a certain extent rely mainly on outsourcing in terms of foreign labors and stuff like that to implement all the wiring and stuff like that. So yeah, but despite all this, they're actually displaying consistent growth in their revenue as well as profit lah. The trust itself does not have a positive yield of around 5.3%, which is also another attractive aspect to, I would say, lure to get investors to put money into this company itself. Last but not least, they have actually a low gearing ratio. As an infrastructure assets, normally infrastructure assets tends to have a higher net debt lah. But in Netlink case, they have actually a lower net debt itself, so which is pretty good. So risk itself, so there are actually a few risks involved. I'll take some time explaining. Actually written some down. So correct me. I mean, if you guys know about this, do correct me if I got it wrongly. But yeah, so actually there are actually a few risks that is out there, and I'd like to share with regards to a few. I've actually picked these 3 out, but obviously there's more than these 3 that is stated here. Why risk is so important is because as an investor, we want to know what is out there, what could potentially cause a disruption, and what is the company doing to mitigate such a factor lah. So before I talk about the points I mentioned earlier, some might say that due to their regulatories under the government itself, is very strict and stuff like that. But I would say under these kind of strict guidelines, to a certain degree, it might be good for the investor as well, as they provide transparency one way or another. So For those who are very concerned with regards to this regulatory policy and stuff like that, the next review will be doing in 2022. What I mean by that is, so what this regulatory body does is every single 5 years, they will actually review the pricing and stuff like that. So if they deem this service as being too expensive, they might actually lower the price, which means that they would get a lower revenue one way or another. So for investor point of view, they might be concerned about this lah. But to me, it's not really a big factor. So yeah, like I mentioned, so for those who are actually concerned about this, the next review will take place in 2022 itself. Yeah. So I believe the other one will be competition risk. Like I mentioned, the SP Telcom, though they are the monopoly of the residential segment, they are not for the non-residential segment such as the business park and stuff like that, in the CBD area and stuff. With SP Telcom, a joint venture company of ST Engineering and SP Group, an alternative to Netlink itself, service provider to Netlink. So however, with the introduction, there might be only very minimum impact due to the stickiness of Netlink business. So when new infrastructure are being implemented and used, it's very hard for them to, I would say, change like overnight kind of thing. So it will take really long time, and I will view them as not really a big factor. So moving down to this three, where I personally consider it as being one of the, I would say, key factor is actually capital management risk. Given that, the current pandemic situation, which I mentioned earlier, they are reliant on, I would say, foreign laborers, outsourcing in a sense. Sorry, this one is the outsourcing one. So capital management risk itself, actually, given the uncertainty and stuff like that, there's a lot of liquidity tightening, and it's one of the reasons why it's harder for them in terms of obtaining funds. However, what they are trying to do to mitigate this is actually to diversify in terms of their funding source itself, in the sense that they're actually reaching out to many other different, I would say, firms, rather than, for example, reaching out to more banks rather than just relying on one bank for funds. Yeah. So second one will be outsourcing risk. Outsourcing risk, what we are looking at is their reliance on foreign laborers to get the infrastructure for maintenance or implementation and stuff like that. So they're actually reviewing the current arrangement and managing the workflow. However, I still do believe to a certain extent there's limitation to all these because a 5-person job cannot be done on a faster pace when there's only 3-person involved. So that's one way we can look at it, and that's what I mean by the limitations that I do see in this current period So we should be seeing a slow in terms of their operation wise. So the last one will be technology risk. I think this one is self-explanatory. Like any tech company itself, this poses the biggest threat as new innovation, appears daily. And with Netlink having actually being one of the, I would say, the monopoly, it's what they say is the bigger you are, the harder you fall. So what Netlink is actually doing to mitigate this is actually to consistently and regularly scan of new emerging trends as well as technology that can potentially disrupt their particular business. However, as an investor, we should not just rely on them itself for them to check. We must do our own due diligence to actually monitor the market or economy as well to see if there's any potential competition that might, interfere with their business. Then we might need to consider if we want to sell or we want to stay, or we want to buy another, I would say buy into the competitor business whatsoever as an investor. So for valuation itself, given the nature of the stock, which can be categorized under income or dividend stock itself, and I would say being a very young company since the IPO in 2017, actually decided to use dividend discount model. For those who are starting finance, this should be pretty familiar with you guys. I've actually come to an appropriate conservative price of 99 cents, which is currently above the recent close, the today closing position at 96 cents. So I deem it currently undervalued. But please do not take my calculation as of face value. Go and research and do a calculation yourself. If not, you can contact your own financial advisors and ask them whether this makes sense or not. So far and so forth. So aside from the model that's being used, given their PB and their P ratio 1.28 and 47.85 respectively, which was taken today, which are currently slightly more expensive compared to the past year itself, is fine. It's fine for me. Sometimes I would say quantitative is not as qualitative is more important than quantitative itself. So, like I mentioned, the growth of the company and factoring other considerations, which is why I do believe the upside's potential outweighs the downside in the long run itself. So, summary, a brief, I would say a recap of what's going on is this company itself, they're a monopoly with recurring revenue streams of up to 90%. They do have a stable and consistent growth. That being said, so we do not expect them to have exponential growth lah. It's not going to be like Tesla, Netflix kind of thing, whereby overnight kind of thing when people realize this is a very bloody genius idea company, we do see a like 100% return in terms of capital gains wise. So it's unlikely you see this in this kind of company. So like I mentioned previously, under valuation, there's more upside potential comparatively to downside. And they do have attractive yield of up to 5.3% on average. So for those who are looking for dividend stock, this might be something for you. So yeah. And I've actually come to the end of my sharing. That's my Instagram, my YouTube. And if you're not in the Telegram group, you can just scan a QR code, then you'll just be inside. Then there is the group where we post news, blogs, forums, articles about anything relevant to finance, economic, and politics or current affairs. So yeah. If y'all got any question, just feel free to, put in a chat. If not, yeah. Oh, and thanks for tuning in and spending your evening with me.